Hey guys, this is Sile and welcome to this exclusive episode of Technical Saturday series. And in this particular episode, we are going to go through the fourth step out of seven-step analysis, which is like price, pattern, volume, and momentum. And in previous videos of this particular series itself, I have covered all the first three topics. And in this particular episode, we are going to go through the fourth topic, that is momentum. Momentum means speed. And in this particular video, we are going to go through the concept of oscillators, which are like set of tools and indicators based on which we will be able to determine the speed of the market. And if you are someone who is new to our YouTube channel, ensure that you are going back to the previous videos of this particular series so that you can understand every single concept in depth, and then come back to this video so that you can get maximum value. And let's quickly jump into the concept of what oscillators are all about. So oscillators, as I've already mentioned, are used to determine the speed of the market the way we have speedometer in any of our vehicles, whether it is two-wheelers, four-wheelers, eight-wheelers, or even more than that, the way we have speedometer, like if the speed of that vehicle is between, like let's consider 20 to 40, then it is like a slow. Then if it is between 40 to 80, then it is like average one. And if it goes beyond 80, then it is like fast. And for supercar, it goes beyond like 150 and 200 as well. So that is how we calculate the speed of our vehicles. And similarly is for oscillators as well, based on which we determine the speed of the market. And there are two types of oscillators. Generally, there are two types of oscillators. First one is banded oscillators, and second one is non-banded oscillators. And as the name itself suggests, like the oscillators are going to be like a band and non-banded as well, which we'll be understanding further. So banded oscillators, as the name itself suggests, it is going to be like a band the way we have bands, like let's consider in any of our vehicle, whether let's consider the speed is between 0 to 100 itself. So it is like a band that the speed cannot go below 0 and it cannot go beyond 100 as well. It can go till 9900 as well, but it cannot go beyond that. Similar is for the concept of banded oscillators as well, where it is like a band between 0 to 100, and the speed of that particular, let's consider that particular index or that particular stock or whatever you calculate, the speed will lie within that particular range of 0 to 100. It cannot go below 0 and it cannot go above 100 as well. So this is like the basic understanding of what banded oscillators are all about. And next we have non-banded oscillators, where there is no such band like upper limit or lower limit. We only have one single middle band, which is like a zero band. The speed of that particular, let's consider index or that particular stock, whichever we choose, it can go above 0 as well, which is like the positive momentum, and it can go below 0 as well, which is like the negative momentum. Although we don't calculate, we don't use this particular non-banded oscillator in our community. We only use banded oscillator so that we can understand all the concepts in depth. And usually, like let's consider there are a lot of people in trading universe, those who use banded as well as non-banded oscillators as well, like RSI, then they use stochastic, MACD, and so on. But whatever tools you are going to use in order to calculate the momentum, in order to understand the momentum, all those indicators are going to indicate only one thing: whether that particular stock is bearish, bullish, whether it is in a sideways zone, and so on. So it does not even make sense to use hundreds and thousands of tools. If you have only one single tool and if you are going in depth of it, then you can definitely master it, and you can definitely get the data whether that particular stock or that particular index is bullish, bearish, or it is in a sideways trend, or similarly whether it is in an uptrend, downtrend, or in a sideways trend as well. So I hope that this concept is clear. And let's come to the concept of what relative strength index is all about. As I already mentioned, in our community, we prefer only banded oscillator, and in banded oscillator as well, we only prefer RSI in unconventional way. And let me quickly share with you the first, that is conventional way, which is like approached by the overall world as well. It is like the band of 0 to 100, and the middle bands are like 70 and 30. It is like an overbought and oversold concept. But the point is that as and when any of the stock, let's consider there is a stock naming XYZ, it reaches the level of 70, then if we use the conventional RSI, then at that point of time, it is like an overbought concept. But most of the trades, even which we take into our community as well, we get some of the signals to buy even more, or maybe let's consider to pyramid or to do other things as well. We get confirmation even after 70 as well. And similarly for the short side, we get some of the confirmation after 30 as well. So that is like, this is, you can consider, which is uh like not that appropriate. And if you want to use RSI in most appropriate way, which you can consider even latest in the fresh manner, there are a lot of people those who are joining like stock trading universe, and they're using RSI in the form of unconventional way, that is like a 0 to 100 itself, band is going to be 0 to 100, but they are using the concept of 60-40, which is not overbought and oversold, but it is like if the speed of that particular stock or that particular index is between 0 to 40, then it is in a downtrend, or that particular stock or that index is bearish. If the speed is between 0 to 40, it is in a downtrend or it is bearish. If the speed is between 40 to 60, then it is in a sideways zone, like a range bound or choppy zone. And similarly, if the speed goes beyond 60, then it is like an uptrend or bullish trend in which we go for long. If it goes beyond 60, then we have to go for long. If it is between 40 60, then we can go for support resistance trading or maybe option selling as well. And if it is below 40, like between 0 to 40, then we can definitely go for short as well. And this is like a $1 million chart, which I got from my mentors. And this is what I'm sharing with you as well. Because based on this particular concept of 60-40 itself, we have different systems into our community. So I hope that you are absolutely clear and you are going to take this particular concept in depth. And even if you're not absolutely clear on this particular concept, you can go through this particular once again so that you can understand every single concept in depth. And even though there are different concepts like RSI range, RSI divergence, like positive reverse divergence, negative reverse divergence, which I'll be definitely covering in upcoming videos. But as far as this video is concerned, this is like the basic overview of what RSI is all about, like relative strength index in unconventional way. So this is how it looks like. And let's take some of the examples where this is like the daily time frame. And one thing which I want to share, that if RSI, the indicator which we are using, if the time frame is monthly time frame, then the long term trend is uptrend. Let's consider if any of the stock is above 60 on monthly time frame, then the long term trend of that particular stock is bullish. If the weekly time frame is above 60, then the medium term trend is also bullish. And similarly, if the short term trend, that is like a daily time frame, it is also above 60, then that particular stock is like completely in an uptrend, where monthly, weekly, and daily all are above 60, which is like a strong uptrend. Similarly, that applies for the downtrend as well. Like let's consider if the monthly time frame of any of the stock is below 40, which means the long-term trend of that stock is bearish. Similarly, if that particular stock is having like weekly time frame is below 40, then the medium-term trend is bearish. And similarly, if the daily time frame is below 40, if the daily chart is below 40, then the short-term trend is also in a bearish trend. And similarly, it applies for hourly, 15 minutes, and so on. Right. So I hope that this concept is clear. And let's take some of the examples of daily time frame of Cummins Industries, where first it was in a like accumulation zone or a sideways zone, and RSI was also between 40-60. So this is like a sideways zone forming similar tops and similar bottoms. Then it broke out of 60 and it was sustaining above 60 completely in an uptrend. Then again it went between 40-60, forming similar tops and similar bottoms, and again moving forward on the positive side. So this is how it becomes easy for us in order to analyze the stocks which are in an uptrend, sideways trend, or in a downtrend, based on which we can take the decision whether we need to buy, sell, or even do nothing, right? So next is Reliance. This is like the monthly time frame, like long-term trend, where for the first few years it was completely in an uptrend. Then from 2008, mid of 2008 till almost 2017 beginning, it was completely in a sideways zone between 40-60. And that is why I mentioned if the monthly time frame is between 40-60, then the long-term trend is either bullish, bearish, or sideways. And similarly, it applies for medium term as well as short-term trend, that is weekly and daily time frame. And then after 2017, right now we are having a continuous rally on the upside above 60 itself. Then we have ITC on daily time frame. First, it was in a sideways zone. Then it broke out of 60 and completely forming higher tops and higher bottoms. Then it went into a consolidation zone. Again, for the short-term trend, it went into an uptrend. Then again a sideways, then an uptrend. And that is how it is important in order to understand the basics of speed, so that we can understand at what point of time we have to execute the trade, at what point of time we have to avoid that particular stock. Next, we have McDowell N. First, it was completely in an uptrend, forming higher tops and higher bottoms. In between, it gave slighter correction as well. It broke down of 60, but after that point of time, it was completely in a consolidation zone that is similar tops and similar bottoms. Next, we have Bank Nifty 15 minutes time frame. First, it was in a consolidation zone, and then it broke down of 40. Then it was completely in a downtrend where it was forming lower tops and lower bottoms, and again it went into a sideways zone. Right. So these are some of the examples, and I hope that you have got absolute clarity about what oscillators are all about and why do we use oscillators in order to understand the momentum of the market, that is speed of the market. Because in order to make money in the market, in stock market, it is absolutely mandatory to have speed. Whether it is investing, whether it is trading, you should trade only and only in the stocks which are having speed, whether on the upside in order to go for long, whether on the downside, that is for short. So I hope that you are absolutely clear on this particular concept. And in upcoming videos, I'll definitely share the concepts like RSI range shift, then positive reverse divergence, negative reverse divergence, and so on. And this is it for this particular video. I'll see you tomorrow with weekly mastermind session. Till then, ensure that if you're new to our channel, make sure you subscribe to our YouTube channel and press the bell icon to never miss our upcoming videos. And along with that, make sure that previous videos, whatever I've shared into this particular series, you are going through that particular videos as well, because by the time you go through that particular series itself and in upcoming videos of Technical Saturday series, if you go through these series, if you go through these videos at least twice or thrice, then you will be absolutely clear on complete, you can consider like a basics of technical analysis, and you don't need more concepts like oscillators, tools, and so on in order to trade in the market as well. So this is it for this particular video. I'll see you tomorrow with weekly mastermind session. Till then, live fully, love openly, and make the difference today. I wish you joy and abundance in all you do.